Imagine you're the king of an oil-rich nation, or maybe the CEO of a massive energy company. Your power, your wealth, your entire empire is built on one thing: the billions of barrels of oil sitting deep underground. For a century, this black gold was better than money in the bank. You could leave it there, knowing its value would likely rise as the world economy grew. Pumping slowly was a smart investment, a way to maximize profits over the long run. But today, the game has changed. Scientists are publishing terrifying reports about climate change. Protesters are marching in the streets. And most importantly, the world's major governments, the EU, the US, China, are all making a promise. They say we are transitioning to green energy. By 2050, we will be net zero. We are bringing in carbon taxes, and those taxes will rise every single year until fossil fuels are a thing of the past. Environmentalists cheer. They believe this will finally force you to keep the oil in the ground. They believe this will finally force you to keep the oil in the ground. But you, the oil king, you look at your vast reserves and you realize something absolutely terrifying. If you leave this oil in the ground for your grandchildren, it will be worthless. Your asset is no longer a savings account. It's a melting ice cube. So, what do? Do you stop pumping? No, you do the exact opposite. You tell your engineers to open the valves all the way. You pump as fast as you possibly can. You flood the market. You sell every single drop you can today, before the taxes hit tomorrow. The result? The price of oil crashes, cheap fuel floods the world, consumption skyrockets, and carbon emissions, the very thing the policy was designed to stop, explode. Welcome to the green paradox. It's the nightmare scenario of environmental economics. It suggests that well-intentioned climate policies, if they're designed poorly, it's the nightmare scenario of environmental economics. It suggests that well-intentioned climate policies, if they're designed poorly, can actually provoke the fossil fuel industry into a massive fire sale, accelerating global warming right when we can least afford it. To understand why this happens, we need to look at a field called resource economics. Back in 1931, an economist named Harold Hotelling came up with a famous rule. He asked a simple question: what's the best speed to extract a non-renewable resource? His answer was that a resource owner is an investor. They have a portfolio with two main assets: oil in the ground and cash in the bank. If they sell their oil, they get cash, which they can invest to earn interest, let's say 5% a year. Therefore, they will only leave the oil in the ground if they expect its price to rise by at least that same 5% each year. If the oil price is expected to grow slower than the interest rate, the smart move is to pump it all out and put the money in the bank. Now, fast forward to 2008, the German economist Hans-Werner Sinn applied this rule to climate policy. When a government announces a future carbon tax that will rise over time, or a future ban on gasoline cars, they are effectively telling producers, the price of your product is going to crash in the future. They are destroying the expectation that the asset will appreciate. They're telling the producer, the interest rate on your oil in the ground is now negative. This triggers what economists call intertemporal displacement, basically moving actions from the future into the present. It's the use it or lose it principle, but applied to the planet's entire carbon budget. Any rational supplier will race to turn their assets into cash while they still can. They increase extraction today, which drives down prices and drives up emissions. The paradox gets even darker when we look at the global picture. The atmosphere doesn't care about borders, but laws do. Let's say the European Union decides to lead the charge. They implement a very strict, very high carbon tax. Europeans stop driving gas-powered cars and demand for oil in Europe collapses. Does this save the planet? Not necessarily. When European demand falls, the global price of oil also drops. Oil is a globally traded commodity. It flows like water to wherever demand is highest. If Europe isn't buying it, that cheap oil doesn't just stay in the ground. It flows to developing nations, to countries with weaker environmental regulations. Because oil is now cheaper thanks to Europe not buying it, these other countries might actually consume more of it. They might build more coal plants instead of solar farms because coal just got cheaper. They might delay their own green transition. This is called carbon leakage. They might delay their own green transition. This is called carbon leakage. The emissions didn't disappear. They just moved from one place to another. And all the while, the producers are in panic mode because of the green paradox, pushing more supply onto the market, keeping prices low, and making it even harder for green technology to compete globally. We can actually see hints of this dynamic in the real world. Think about the shale revolution and the fracking boom in the United States. A big part of that was new technology, for sure. But many economists argue that the rush to extract oil and gas in the 2010s was also driven by a deep-seated fear of stranded assets. Oil companies know the clock is ticking. Their investors know it too. Their investors know it too. This is why you see so many of them prioritizing short-term dividends and stock buybacks over long-term exploration projects. They're essentially liquidating the company. They're cashing out now. They are not investing in new oil fields that would only start paying off in 2050 because they don't believe there will be a market for their product in 2050. Instead, they are pumping their existing fields dry as fast as possible. This rush for the exit keeps oil prices stubbornly low, which acts as an ongoing subsidy for gasoline cars and a major barrier for electric vehicles. So, is the situation hopeless? Should we just give up on climate policy? Absolutely not. Economists like Hans-Werner Sinn aren't saying we should do nothing. They're saying we need to be much smarter about the timing of our policies. The fundamental flaw that triggers the green paradox is the slow ramp up. Politicians love to make grand promises like, we will be net zero by 2050, or we will slowly increase taxes over the next 20 years. They do this because it's politically easier. It avoids immediate pain for voters and kicks the can down the road. But from an economic perspective, this gradualism is exactly what triggers the paradox. It gives the fossil fuel industry a 20-year warning, a clear window to liquidate their entire inventory. To avoid this, the policy needs to hit the supply side immediately. One solution is an immediate high-carbon tax. A tax that starts high today is far more effective than one that only promises to be high tomorrow. If the tax hits now, the profitability of pumping oil drops now. The incentive to pump faster disappears because the extra profits are already gone. Another, more direct solution is to restrict supply. This could mean taxing the capital income of resource owners, or more simply, buying the resources and leaving them in the ground. If we want coal to stay in the ground, the most direct way is to buy the coal mine and just shut it down. Or governments could enforce strict limits on extraction permits, controlling supply directly, rather than just try and manage demand. Of course, the ultimate solution is a technological breakthrough. The only thing that truly beats cheap oil is cheaper clean energy. If solar panels and batteries become so cheap that they undercut oil without any taxes or subsidies, then oil becomes worthless not because of laws, but because of simple obsolescence, just like whale oil was replaced by kerosene. But we can't just sit around and wait for that to happen. Think of it like fighting a bacterial infection. If you give a patient a weak dose of antibiotics and then slowly increase it over several weeks, you don't kill the bacteria. You teach it how to survive. You create a resistant superbug. The fossil fuel industry is the bacteria in this analogy. If we attack it slowly with telegraph punches and distant deadlines, we trigger its defense mechanism, the green paradox, and risk making the problem worse. We trigger a run on the bank, but in this case, the bank is the vast store of carbon locked in the Earth's crust. The green paradox is a challenging and controversial theory, but it teaches us a critical lesson. We are playing a high-stakes game of chess against one of the most profitable industries in human history. They have some of the world's best economists on their payroll. They understand opportunity cost and discount rates better than anyone. If our policy is simply, we will hurt you in 10 years, their rational response will always be, then we will burn everything in the next 5. Solving the climate crisis requires us to understand that we are not just fighting the laws of physics. We are fighting the laws of economics. We are fighting the rational and perhaps desperate urge of a dying industry to cash out before the music finally stops. To win, we have to stop signaling our punches and start landing them. Thanks for watching. If you found this interesting, consider subscribing for more deep dives into the complex challenges we face.